everyone, and happy Monday. Welcome to the market wrap for the 16th of February. And look, it was a fairly muted but still positive start to the week, with the Aussie market ending higher by roughly 0.1%. Of course, this does follow quite a rough session on Friday when we were down by 1.4%. But thanks to some solid sessions earlier on last week, we actually had our best weekly performance since May, and we definitely got within just 10 points of a record high at one stage last week. So got very close, very normal for investors to pull back when we get around those key psychological levels. And of course, tonight we have the US market shut for a public holiday. We have Chinese Lunar New Year going on, so we have some other markets shut as well. So it is quite normal that we did see a fairly muted start to what's going to be a very busy week. So let's look at the different sectors today. We did see most of them actually gaining ground. The materials sector, however, was down by around 1%, which certainly didn't help and capped some of our improvements. We saw financials ending pretty much flat, and our smallest sector, utilities, ended down by close to 1%, but pretty much gains of around 1% or more across most of the other sectors. You can see healthcare was up 1%, bouncing back from quite a rough week last week as well. Consumer discretionary up 1.6%. Communication services up 1.2%, industrials up 1.4%, real estate was up around 1% as well. And of course, tech there shooting the absolute lights out, up by 5.7%. But remember, it did fall by around 11% over the prior two sessions to a 2-year low, and that was amid concerns that AI could disrupt established tech firms. So it's on track for a 7th straight monthly decline. It's down 20% so far this year, and that's after falling by around 20% over the course of last year as well. So tech, even though it's had a good day today, it's been a rough ride for the sector for quite some time. So we did still see some of the big tech names ending on the winners list today, like WiseTech, Life360, Xero, and Technology One. But of course, as I mentioned, that does follow that sharp sell-off in tech stocks. JB Hi-Fi posted record half-year sales and also raised its dividend to $2.10. That's up 40 cents per share. It also reported that sales have continued to grow in January for both JB Hi-Fi and The Good Guys, but said it remains cautious given the uncertainty in the retail market. A2 Milk climbed by a solid 7% after delivering strong first half growth and upgrading its full year outlook. Its total infant formula, milk formula sales rose by 13.6%, and its China label achieved record market share. So that seemed to impress investors and calm some nerves, particularly after it was recently sold off in late January after China registered its lowest number of births on record. So a nice bounce back in A2 Milk today. And logistics company Qube climbed to a record high after agreeing to be taken over by a consortium led by Macquarie Asset Management in a deal worth $11.7 billion. So it shares up around 3%. On the other end, though, the owner of Penfolds Treasury Wine Estates had quite a rough session. In fact, it was the worst performer today in general on the ASX 200, and that was after reporting that it swung to a $649 million half-year loss, and that's after more than $750 million in impairments related to its struggling US business and a slowdown in China. And that also forced the company to suspend its dividend as it looks to transform its business amid weaker demand for wine. So Treasury Wine Estates down around 5% today. Iron ore miners were under pressure as well. We saw Rio Tinto slump by around 4% after suspending operations at its iron ore project in Guinea following a fatality of a contract worker on Saturday. We also saw iron ore futures hit multi-month lows in Singapore, trade to around $97 per ton on the back of oversupply concerns. So that did weigh on some of the other mining giants today, like BHP, and Fortescue was down 4.7%, dragging its share price to its lowest level since November. Of course, this does also come ahead of earnings results from BHP tomorrow, and then Rio Tinto will be out on Thursday. So that's something to keep an eye on. Now, the Aussie dollar has continued to climb. It's currently buying 70.8 US cents. That's after hitting a 3.5-year high just a couple of days ago. Now, from here, as I mentioned, the US market is going to be shut tonight for the President's Day public holiday. We have Chinese markets shut for the Lunar New Year holiday as well over the course of this week. Reporting season is getting absolutely huge. We have almost 100 companies handing down results over the course of this week. So tomorrow we have some big names. We have BHP, that's going to be a big one. We also have Baby Bunting, Challenger, Sims, which is the scrap metal company, and a few others. But Thursday is going to really be the big day of the week for reporting. So we'll talk about it each day. And we do also talk about this in our CommSec Market Update podcast. It's a 10-minute podcast. It's twice daily, one in the morning and one in the afternoon, where we'll go into a little bit more detail than this video on the company results. So give that a listen if you're wanting to hear more. Have a nice night and see you again tomorrow.